Hello everyone, welcome to a class of management accounting. Our topic is ratio analysis. Today we are going to do our 11th lecture, that is question number 6. From 1 to 6 we had prepared a ratio on balance sheet. So from the next lecture, that is sum number 7, we will start with the ratio on profit and loss account. And student, please watch the video lecture wise. First of all, introduction and all that, and check the I button introduction for vertical balance sheet, vertical P&L and combined ratio. So let's begin with question number 6. So in question number 6, simple balance sheet is given. You are required to prepare the ratio, and there are two companies, X Limited and Y Limited, and they're asking for proprietary ratio, capital gearing ratio, current ratio and stock working capital ratio. So in this we had to prepare a ratio for both the company X and Y. And second thing, student, they are not asking for vertical balance sheet. So no need to prepare a vertical balance sheet. Directly we can calculate the ratio. So our first ratio is proprietary ratio. So before starting with the ratio, so please put the tick mark that which entry will going to be appear. Like equity share will appear in proprietor fund, reserve, proprietor fund, debenture, borrowed fund, creditor, bills payable, tax, current liability as well as quick liability. There are only one non-quick liability, that is bank overdraft, and remaining other are quick liability. And on asset side, the land, building, plant, this is your fixed assets, data, stock, cash at bank. This is your current asset. But in this stock is non-quick assets, and one more asset is that is prepaid or advance expense. And remaining other are quick assets. So let's begin with proprietary ratio. The ratio says that proprietor fund should be divided with total assets. What is total assets? Fixed assets plus current assets. Now over here, proprietor fund, it is there for X Limited I am talking. So for X Limited is 8 lakh, and the total assets for X Limited, we can say that there are all assets. So totally we can take 12 lakh 15,000. So it's simple. For X, proprietor fund is 8 lakh and your total assets 12 lakh 15 in 200. So your answer is 65.84. Same way for I Limited, proprietor fund is 3 lakh and total asset is 9 lakh 30,000. So your answer comes to 32.26%. Now the next ratio is capital gearing ratio, preference share plus debenture upon equity shareholder fund. In this, preference share is not given. Debenture is there for 2 lakh and 5 lakh. Equity shareholder fund, we have formula that equity share plus reserve and surplus minus miscellaneous. So we have equity share, reserve and surplus. Miscellaneous will appear on the asset side. So there are no miscellaneous expense, that is P&L debit entry or fictitious asset or share issue expense. So only we have to add this 7 and 1, that is 8 lakh. Again, equity shareholder fund is 8 lakh and preference share is not given, only debenture is at 2 lakh. That means 2 lakh divided by 8 lakh for X Limited. 2 lakh divided by 8 lakh and your ratio comes to 0.25:1. Same way for Y Limited, 213 lakh and your debenture is 5 lakh. That means 5 lakh divided by 3 lakh. So your answer comes to 1.67:1. Now current assets upon current liability, we have 3 current assets and as well as 3 current liability for both X and Y Limited. So it's simple. For X, 210, 1 plus 55, that comes to 365. Same for current liability of X, 120, 40 and 55, it comes to 215. So 3,65,000 divided by 2,15,000 comes to 1.7:1. Now Y Limited, 110, 2 and 40 current assets and current liabilities 70, 20 and 40. Total comes to 350 divided by 130 and your answer comes to 0.69 raised to 1. Now the last one is stock working capital ratio. Stock, that is your closing stock. We have already closing stock 1 lakh and 2 lakh. But working capital, for working capital there is a formula, current assets minus current liability. So we have already find out the current assets and current liability for X and Y. So simply we will going to minus the figure. So 365 minus 2 lakh 15. So that is your working capital, and stock is already given 1 lakh. So 1 lakh divided by 1 lakh 50. 365 minus 215 comes to 1 lakh 50. And your answer comes to 66.67. It is a recurring, student, 66.6666. So in the recurring you can directly write 67. Now in Y Limited, our current asset is 350 and 130 minus the figure, and the stock is 2 lakh. So 2 lakh divided by 2 lakh 20, and the answer comes to 90.90%. So this way we had completed question number 6. All 4 assets has been done. Now student, in our next lecture we will start with profit and loss, that is income statement ratio. So please watch all the videos. Till now there will be no doubt. Thank you for watching the video. God bless you.